You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. Bitcoin, Ether, Ripple, Litecoin, and more. Cryptocurrencies and other digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity. Provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments on everything from coins to tokens, futures, and even OTC options. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. Now it's time to dive into the exploding world of cryptocurrencies and digital assets. It's time for the Crypto Rundown.
All right, everybody, that music means it is time once again for the Crypto Rundown, the program where we break down everything going on the other side of the fence, the crypto side of the fence. So we're going to talk the spot out there in Bitcoin, also the futures, the options, the vol, the skew, the term structure, all that good stuff. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting The Options Insider Radio Network. We have a lot of great stuff to get to on this episode and a great guest to help me do it. So without further ado, let's keep on rolling right on into the Crypto Hot Seat.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everybody, welcome to the Crypto Hot Seat. Like the man said, this is the portion of the program where we welcome on guests from throughout the world of crypto and digital assets and proceed to pick their brains for the benefit of you, the listener. And next up is a newcomer to the program and indeed to the network. He is Grant Colthup, the CEO of Mine Digital. Grant, welcome to the Crypto Rundown program.
Welcome very much, Mark.
Well, Grant, as we are wont to do with all of our first-timers here on the program, why don't you go ahead and give our audience a little bit of an overview of your background in the financial and indeed crypto space and how you found your way to starting Mine Digital.
Yeah, sure. So I guess like a lot of the listeners, I went to university, did economics, finance. I originally worked for a quant macro fund. I worked there for about 18 months before moving on to an investment bank, working on their fixed interest desk, and then ultimately working for a proprietary trading firm, mainly doing RV, relative value fixed interest, also relative value equity indices trading. Did that for several years, and that's sort of where my first, I guess, foray into crypto started. So I was still trading very actively during the Euro crisis, and obviously at the time that was sort of when Bitcoin had been around for a little bit, and I think started to really enter into people's mind as potentially this thing being some type of macro hedge or capital, something that could aid capital movement in times of crisis. So I think had obviously myself and several other people I worked with at the time got really interested around 2011. And then, like most traders, as soon as the crisis went away, we sort of put it back aside and didn't really think about it too much more. And then I spent another year in academia, actually. Contemplated being a professor for a little bit and then thought better of that, and then went back and worked for a fund manager here in Australia for 5.5 years, and that pretty much took me until the end of 2018, and that's when I sort of resigned and been offered the position to, found and be the CEO of My Digital, but I'd sort of gotten actively back into crypto really at the end of 2016, trading it on a fairly active basis, and then through 2017, myself and several other guys who I used to trade with formed, like everyone else, a bit of a ICO syndicate and things like that, and we participated fairly actively in the space through 2017, 2018. I was very lucky that the opportunity came along for me to set up My Digital. So My Digital is one of the newest Australian exchanges in Australia, focusing mainly on fiat to crypto at the moment, but also looking to build out a derivatives offering. So we are fully licensed in Australia to offer derivatives to both retail and wholesale clients. So we're just sort of, at the moment, working through our exact offering in that space. And we're also have full insured custody offering, and are also looking at setting up some type of Bitcoin fund at the moment as well, just again working through those details at the moment.
So obviously the crypto exchange space, pretty hot one, pretty contentious one, pretty crowded one. A lot of players out there already. You got your BitMEXs, your Deribits, who just had LedgerX on the program last week. CME's obviously playing in their ICE. I could keep going on. We had Gemini on here. ErisX is coming into the space soon. There's a legion of players fighting for that crypto and indeed that crypto derivatives exchange side of the space. So what was it that made you decide, you know what, we need one more player in the crypto exchange space?
Mainly as you said, you mentioned all those major names, and obviously to American listeners and European listeners, and probably even to a lot of Asian listeners, those names are really well known. Asia and the Asia Pac region's probably had has really been dominated by the crypto to crypto space, and I know obviously OKEX here in the Asian region now is the most successful futures contract. So. But what we really did see is there's still that gap between that crypto to fiat layer here in the Asian Pacific region, and that's sort of, really our target is to provide, that level of service across, Australia and New Zealand, but then really building out into Southeast Asia, and Singapore is really our ultimate target. So we still think there's quite a reasonable gap there in the market. Also, then in the Australian market itself, the two incumbent exchanges have done very well in the point of view from, providing a safe service, but the remainder of their service really hasn't adapted over the last several years, obviously, as the market's moved along quite a bit. So we do see, again, that there's something in the market there for us. On the derivative side, we're much more trying to focus on offering derivatives to, more to the retail segment, which is probably where we do differ probably a little bit from some of those other names of where they're probably there more as a professional venue or dominated more by professional traders or trading firms, whereas we're trying to bring it to make it much more simple, easier to use for the retail user.
So it sounds like you're focusing more on that market segment where maybe they want their Bitcoin or whatever their crypto product of choice is denominated in Aussie dollar or in Asian currencies. That's kind of the market you're going for? Correct.
And that's the other interesting thing. So I think as you'd well know, so for retail users, oftentimes something like Deribit where, prices and premiums are denominated in Bitcoins, it's not necessarily the most intuitive way that they would approach that, whereas probably most of the product offering will be denominated in a fiat pair. So as you said, either Aussie dollars, New Zealand dollars. We will also be offering a US dollar book as well. So again, there's obviously demand from various investors throughout this region to want to use US dollars as well.
Yeah, I'm with you. I'm not a fan of what Deribit and the others do, where they quote it in the notional and the total. That to me is just endlessly confusing for a lot of people. We're used to show me the specs, show me the prices things are traded at, not these crazy notional quotes that everyone seems to have embraced in the crypto space. I know a lot of the regulators, particularly here in the U.S., are pushing back against that as well, because that just it obscures what really is going on out there. Quoting me some notional value doesn't really tell me much about what's actually going on in the space. But I digress. I can go down that path for quite a while. But you touched on something that's kind of interesting to me. You mentioned making crypto derivatives a little bit more palatable, a little bit more easy to use, easy to understand for that retail audience. That's kind of interesting to me. Obviously, one step of that is obviously denominating that in their local currency. That's going to go a long way to making it more palatable for them. But what else you guys have planned to really make, I'm assuming you're talking Bitcoin futures, but maybe even beyond there, to make those products more palatable and easy to trade for the retail client out there?
Yeah, so I think one of the main things where we've been focused, or trying to focus it on, is to more than, I guess, what traditionally what the role filled like by a broker, really, and that's to really try to understand what people in the market are looking to do. So a lot of it, and we've seen this with the success of the CFD type offerings in crypto, oftentimes like a eToro, for example, where they advertise like, you don't have to worry about, hassle of managing keys and things like that. So we looked at that, and took a bit of that and did some more research. And we found a lot of it would be like, a lot of investors out there, especially on the retail side, are thinking like things like, oh yeah, I think definitely Bitcoin will go up. Okay, well, you think it'll go up? Like, how much do you think it'll go up by? When do you think it'll go up? And so very simply, from then using a drop-down box type menu, you can start to, obviously, the user can start to build out some type of, an option strategy, or it could be, a covered call. So in Australia, traditionally covered call strategies have been very popular in single name equities. So things like that, we start to think that, you allow the user to sort of guide themselves into, to expressing their view. And then essentially you would give them the quote for the price, for the option or the product, whatever it may be. And then obviously they can trade, yes or no at that point. And then obviously there would be a secondary market for that at some degree, as you know, depending on how much the specs of that option change is obviously going to affect the, the liquidity in the market. But, we think that's really, what people are looking for and are liking. So we did a bit of research with a fellow recently who went out and built a very simple prototype app. And what we did was we tested people's appetite to look at different signals. And what we found was that they liked the idea of using, combining maybe 20 or 30 signals to invest into. But the more, I guess, the way that we could aggregate those signals into a singular representation was the more successful it was. So it ended up being that things like such as, if it was an overall aggregate buy signal, was that we were using things like akin to like a weather app where, the next 7-day forecast was sunny. So that meant, that you should stay long. And we found those things to be really, really simple, and people actually then would go away and then actually do the research to understand what was going on in the background. But in the initial sense, it removed that barrier of complexity, and it sort of seems to be in crypto that's definitely been something that's hampered the retail adoption.
That's fascinating. I think there's a lot to unpack there. I want to start with what you touched on because it addresses directly one of the next questions I was just going to ask you, which is what kind of activity are you seeing on the platform? It sounds like covered calls are the hot thing over there in the crypto derivative scene in Australia.
We're actually just about trying just to finish off all the terms and exact structure of those products at the moment. But yeah, I mean, it's one of those funny quirks. I guess it's like in Hong Kong markets, how you see, certain structured products are sold by retail investors over there. In Australia, traditionally, covered calls have been very popular as a strategy amongst the retail investors in single name stocks. They want to own their BHP and they think that, it's gone up enough for the year. So, they go out and sell some calls against it and they get a little bit of premium there. And we do think that that's something that people definitely like, the idea of having this, income type fund mentality to their crypto. I think as we're seeing now, also other types of products that we've seen that come out, where people are getting paid, obviously, some type of interest in a borrow-lend sense in their crypto, again, enhancing some type of yield on it. We really do think, I guess, the way that traditional financial markets are, is the retail market really is a yield-orientated market, and I think trying to, transition some of the capital return growth that, has come with Bitcoin over the last, 10 years very strongly into a yield-type return, again, is something that starts to attract people into that market. And then obviously, as you would know, the appetite for options, I think, is going to grow amongst the segment of the market again that is maybe more of a passive investor, but wants some type of protection in place, or even down to things like the miners, or can start to look to use a variety of different strategies there.
Yeah, you kind of have a bit of a double uphill battle in Australia, because at least here in the U.S., when it comes to embracing derivatives, we already have a pretty strong, robust listed options and futures market that people can turn to and has generated a lot of interest. So when it comes to flipping the switch on crypto, there's already a built-in audience there. Where in Australia, it's growing, but it's still very much nascent from a derivative side. So in many ways, you have to first lead them to the water of crypto and then lead them to the waters of derivatives, and then hopefully they can make it through those multiple barriers, and then hopefully finally they can drink and start trading some of these covered calls you're talking about, Grant.
Yeah, you're absolutely right, Mark. Like, that is definitely, as you said, funnily enough, it was one of those things where Australia really has never really embraced a ETO market. It's sort of, it's had some, at the institutional level. In my past life, obviously there was somewhat of a market there, but even then, it was still nowhere near. Personally, I obviously traded ETOs on interactive brokers for several years, and as you said, in US markets, and yeah, it's definitely quite a step back from that. The interesting part where we're finding it is just more people asking questions. So one of the interesting things we've done over the last 6 weeks, and I've actually got a presentation tomorrow. So we've done a national roadshow tour. So we've gone around and we're visiting in total 9 cities in Australia in a period of about 12 weeks. We were doing that in collaboration with Blockchain Australia, which is one of the industry bodies here, and just going around and sort of, starting to spell out some of these concepts and ideas and things like that. And as you said, it's just a effort for us at the moment to introduce those concepts and ideas into the public lexicon, and just start to get people to sort of, as you said, feel more comfortable with it, understand it, and potentially see how it could be of value for them. But we've been quite, I guess, quietly optimistic that there's been enough people have asked questions and have shown interest. We think where we've had some, again, good follow through is we're starting to see people are, I guess, it shows like yours and other shows, especially more offshore, and trading rooms and trading, chats and things like that. People are signing up for and are getting exposure to, because as you said, those, people from other parts of the world, i.e., especially the States, these are things that are getting spoken about quite frequently. So, people are, I guess in the modern age can access that information. So they are getting a small amount of exposure to it. But you're exactly right. We're quite cognizant that it's going to be for us a period of time to build that up and to get people interested in it. For us, we're quite lucky. So, in one aspect is that we actually constructed the business model and the resources and exactly the way that we're going to go about it, literally during the crypto winter. So I think the final budget when we signed off and secured our investment was literally, I think, 2 weeks before before Bitcoin hit its low. So from our point of view at the moment, we think we can, we have a fair bit of runway. So we're sort of out there trying to be, at the moment, I guess, do all that groundwork, that legwork, and really just start building those foundations in place for hopefully, a lot more busier 2020.
Fortuitous timing, indeed, to be there at the tail end of the crypto winter. You also have another bit of luck in that you're you're based over there in Australia, and we talked about maybe the market for derivatives isn't that big there yet, but when it comes to being crypto friendly, I'm hard pressed to think of another region or country of the world that is more embraced crypto than Australia. I've lost track of how many of the guests we've had on this program in particular over the past year. Some ridiculous percentage have come from your neck of the woods. So at least you have that working for you, Grant. You have a very crypto-friendly regulatory environment. It seems like they're all in on crypto over there in Australia. Has that surprised you, just how crypto-friendly it has become over there in Australia versus, let's say, here in the U.S., where we're still waiting and seeing on a lot of these major regulatory initiatives in the crypto space?
Yeah, it's quite it's a artifact of a few unique things about Australia. So one of the interesting parts is really leading up to 2008 is oftentimes Sydney was the base for most of the major global banks. It ended up being the base of their prop groups, excluding Japan, obviously, because Tokyo sort of was always its own standalone market, and obviously is an island, but standalone to itself. But so Australia had a very, very strong, history of macro hedge funds being domiciled in Sydney, and then a lot of the big prop desks being domiciled in Sydney. And I think, as you would know, post 2008, Bitcoin, and especially on the professional trading side of Bitcoin, has really been dominated by those who have come out of bank trading desks, out of macro hedge funds who are seeing this, out of volatility funds who are seeing this as a fantastic opportunity to get back into an asset that has, legitimate movements in it and is still very nascent, as you said, and also has that large retail element to it, which obviously, at the moment, oftentimes who wants to trade some of these more institutional markets at the moment where, you're looking at, participation by institutions is 80% plus, so it's sharks versus sharks, and that's very hard to, get long-term profitability out of that. So I think that was one aspect. So the Sydney crypto community, especially very early on, was probably about 50-60% dominated by persons like myself and, my former colleagues and friends who were all, either prop traders, former prop traders, or guys who'd been around in banks and things like that who saw this as a great opportunity to jump onto. I think the other thing is we're definitely nothing like the States in the fact we have a Silicon Valley or anything like China where we've got, blockchain academies with, thousands of students in it. But we do have our tech scene is per capita is probably still even on the small side, but the tech people we do have tend to be quite high caliber. So a good example of that is Consensus has one of its major development offices in Brisbane here in Australia. I think about a 30-person team there, led by a guy who'd be globally seen as one of the top 10 devs for Consensus globally, and they've done a series of projects here in Australia and Singapore recently that have been quite high profile. So I think that also helped us a little bit. And then the other thing about us, again, as an Australian thing, which unfortunately, very sadly, has declined recently, but, really around the birth of cryptos, we used to still be, quite as a country, we're quite happy to have, some level of risk on board. So, there were probably people who sort of in 2010, 2011 were like, I'm interested in this crypto thing. And then obviously, it's taking years for people to get really into it, but that's sort of, I think describes we have a few little, real idiosyncratic factors that have driven it on the interest side, on the community side. On the reg side, I think, traditionally we have had a reasonably good regulator, which is ASIC over here, the Australian Securities Investment Commission. At the moment, we're undergoing a little bit of a crackdown. So, unfortunately, they have just announced a few things that they're trying to, mimic the FCA and the SEC, especially around the derivative space on the, CFD side and the binary options and things like that. But traditionally, they've been quite friendly. Funnily enough, I saw just yesterday the headline came out that ASIC have actually postponed the changes that they'd proposed. So hopefully, the industry here had pushed back quite heavily against some of the proposed changes. So hopefully those get delayed. But from from a regulatory side, I guess, or from a government intervention point of view as well, I guess we're a small, open economy. We really need to be, open to these types of things. So we've, traditionally been, a relatively reg-free type location. As I said, sort of probably like the rest of the world at the moment, we're probably sitting on a bit of a knife edge at the moment, and hopefully we stay on the good side.
Well, Grant, you discussed a lot of interesting challenges that face the crypto exchanges across the world. I had this conversation last week with LedgerX and a number of other exchanges in the space, that what it means to be an exchange in the crypto world is very different than what it means in the traditional financial world of cash equities or options or pick your other quote-unquote established marketplace. An exchange has a very clearly defined and delineated role, and that's it. They're a place to aggregate liquidity, pretty much no more, no less. And a lot of the other things you're talking about, going out there and finding customers and bringing them into the space and designing the front end, making the product more palatable to them and easy to understand, that's all the domain typically of the brokers. And so what we have in the crypto space is this weird and somewhat interesting conflation of the roles of the broker and the roles of the exchange are just aggregated into one player. I think a lot of that is because the space really hasn't been defined yet from a regulatory perspective, so people are just diving in, and people have told me that, they probably would prefer not to have to do all this stuff, but there literally is no one else. So if they don't go out there and explain the product to the end user and design the front end and do all these other things that are traditionally the domain of the broker, then no one would be there to do them. So some people view this as a bit of a challenge. Some people view this as an opportunity. I'm curious, what are your thoughts on this intermingling, essentially, of everything you're doing there at Mind Digital? You're effectively a broker and an exchange all kind of rolled into one. What are your thoughts on how that's really shaped up these days in the crypto space?
Yeah, so, well, for a start, completely agree. As you said, it's traditionally, as you said, all these things really. And the funny part is, I'd say even for most exchanges these days, and, even for us, obviously, if we could point to a exchange in Australia where we said, that's a heavily regulated, a well capitalized, great technology, low cost, low spread, high liquidity venue. We wouldn't probably consider doing the exchange part. So I think you're exactly right. So the funny part of it is what you just described was actually essentially how. I guess ultimately how we decided to get into the exchange space. So my first challenge was that so I was working for a group of investors who'd approached me. So they'd been investing heavily in crypto and blockchain throughout Asia, and they were really looking to try to come to Australia to do a few things. And so I said, well, okay, they had approached me about doing some due diligence reports, and so I sort of submitted that, and ultimately that's what they said. It became very obvious to them. They're like, well, the exchange at the moment is still the gateway really for access, even if they were wanting to do more passive, long-only investment into, whether it be into projects, whether it be into technology, certain technology itself, is that, the exchange still was the absolute gateway to accessing all these different, opportunities in the crypto space. And that was one of the reasons become one of the overriding, I guess, qualitative reasons outside of the quantitative, numbers and potential profitability for doing the exchange, was the fact that this will, I guess, cements us and puts us in good stead to be part of the conversation in the Australian and the Asia Pac marketplace, because it is still something that people in this space look to. People look to, the exchanges to, whether or not you're doing a cap raise for a new project, or, a good example at the moment, like things like if you're looking to implement some type of new trading technology, so, maybe a new trading platform, who are the persons of that platform going to, approach and want to speak to? They're going to want to speak to the exchanges, because they know themselves it's very difficult to go out and, go and try and sign up 50,000 users to your new API-based trading platform that's got, 30 different types of order types and can be, is a BitMEX, compliant API and all those types of things. It's much easier to sort of try to go to BitMEX and ask BitMEX to sort of go, well, we've got this cool API plugin that we've built for your exchange. Do you guys like it? And if you do, we'll share some economics with you, and, you can get it out there to your how many thousands of, tens of thousands of users you have. So I think you're very, very much right. And I think that's probably the something that excited us about the space. But as you said, you have to take on, I guess from a traditional exchange point of view, as you said, you're taking on activities you traditionally didn't have to do. But I think from our point of view, we'd probably see ourselves in, say, that 3 to 7 year time period where these things do become more delineated. I think ultimately we're probably going to fall back towards the broker-dealer side of the business is something, and investment management functionalities where we probably see our true value add and our true ability to service clients in Australia is probably more going back towards that side. I guess as a diversified financial services company that operates in the crypto and digital space.
Yeah, I don't think you're alone in that assessment. I think people are doing both right now out of necessity, but eventually the space will firm up more from a regulatory perspective. And I think at that point, firms will choose one path or the other. And I'd imagine a lot of them probably going to go a similar path that you're down. Well, Grant, I'm glad you can come on to give us more insight here into what's going on in the world of crypto derivatives from an Australian point of view. Who knew? Covered calls, the hot thing in the Australian crypto derivatives market. But before we go, if some of our audience, maybe they're intrigued, maybe they like the notion of trading their crypto derivatives denominated in Aussie dollars or in some of the other Asian currencies, or perhaps they just want to learn more about Mind Digital, Grant, where should they go? What should they do?
Yep, so minddigital.exchange is the site. We're literally the order book exchange is going live this week, so it's very exciting times for us over here. And stupidly, I also committed to flying to Tasmania to do a presentation tomorrow night. So it's going to be a bit hairy whilst I'm on the plane. Hopefully the team has everything managed. But yeah, we're obviously adding to the site as we speak. So as I said, we're sort of still finalising all the terms and conditions and things like that around the options side, and also we're looking to launch that platform. So at the moment, all options trading will be done on OTC basis, and we're looking to finalise a platform in Q1 of 2020.
Well, we'll look forward to checking it out for ourselves here, Grant. And it sounds like we had good timing getting you on here right before the launch. If you want to follow them on the old Twitters, listeners, it's just mind_digital. I want to thank you again for coming on, Grant. We'll look forward to seeing how all this unfolds in the Aussie market there in the coming months.
Absolute pleasure. Thank you for having me, Mark.
All right, listeners, we're not done yet, though. Nope, not by a long shot. It's time for us to keep on rolling right on into the Bitcoin Breakdown.
It's time to explore the latest trading activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown, the portion of the show we break down what the heck's going on in the world's leading digital asset, of course, talking about Bitcoin, the big dog out here, and a little bit of a downtrend net on the week, even though there was an interesting range throughout the week. Coming into showtime, we're seeing Bitcoin down about 160 or so bucks from where it was this time last show. Though in between there, we had a bit of a range that was kind of interesting, about a 500 handle range intra-week. We saw the high of the week yet again on our show day last week on the 14th. So apparently we talk up Bitcoin here on the show. It's been a common occurrence, probably a lot of that aggregated, delayed volume coming in from the weekend as well. Probably has something to do with it. It seems like Monday always is a very active and often a high point for the week. So I hit a high of about 83.5 or so on Monday, and the low of the week came on Friday, right around 78, 76. So it broke that 8,000 level to the downside. Didn't stay there too long, though. Bounced back up, and here we are coming into the latter portion of the show, a little bit north of 8,200 right now in Bitcoin out there. Vol, given the fact that we had decent little range last week, is pretty much unched. It's hovering right around that 60%. In fact, it's pretty much exactly 60% right now. Talk about the 1 month realized now is what we're talking about here. So we've seen enough movement. About 500 handles is enough to sustain that 60% level out there, and that's pretty much what we're seeing out here. So unched from an overall realized vol perspective. Options volume, we were just talking with Grant about what's going on the Aussie derivatives side, and overall Volume-wise, again, I also pointed out my problems with how they report volume in the crypto derivative space. Deribit is certainly an offender here as well. They like to record things and report things in notional. So we've adjusted. We use that $30 million benchmark as kind of a gauge for whether a day was fairly active or not. And we pretty much only had a few days just ever so slightly last week above that 30 million notional level. So not a lot overall to parse. In fact, some of the few size interesting trades that came across our radar weren't even that size or extremely interesting. At the end of the day, we saw some people buying some downside puts, OC 7,000 puts, 150 of those. Those are pretty near term at this point. So of course, we broke the 8,000 handle last week. So 7,000 maybe not looking too terrible. Let's see, where was Bitcoin when those puts went up? The Bitcoin was 8,008. So it was just flirting with breaking that 8,000 level. So maybe someone was concerned about a little bit more downside, or maybe that or they were taking some off. We'll get to some of the size OI out in October in a minute. And then also saw a lot of the OC 9,500 calls going up this week. Paper buying those. Interestingly enough, that's a bit of a flip of the script from one of last week's big trades where we saw someone selling 163 of the OC 9,500. So apparently 9,500, an active size week. Maybe someone buying those back this week after a bit of a sell-off. But otherwise, not a heck of a lot of size trades to really light up our tape here this week. Looking at the term structure out here, similar to last week, the front portion, that OC contract going out the end of this week, OC 25th, a little bit slightly backwards, so it's bid up over the primary Nove contract, talking implied vol now, talking about a 57 versus about a 56, so not much, not huge really, just a wee little tick up there, as our friends across the pond would like to say there in that front portion of the curve, and the rest of the curve is pretty much straight up out there to March. You get about a 75 at the money implied vol. That rest of that pretty much the same. Call to put out here up ever so slightly this week. That's up to about 58.5% from about 54%. So the calls still in charge ever so slightly. For a while, they remember puts were leading the dance. And I'm sure maybe if we pulled it up on the day when we broke 8,000, that might have been the case. But right now, calls still in charge here on the open interest side. Open interest also growing a little bit out there, ticking up a bit from, it was 409 million on the last show. Now it's about 443 million out there. So interesting stuff out here from a growth of open interest perspective. If you're curious where that OI is concentrated, let's break it down a little bit further. Which months have the most size positions? This is across all the venues. This is across Deribit and LedgerX and a bunch of other ones you could think of out there that would qualify, and at least from this data, of course, coming from our friends courtesy of SKU SK3W. They've been doing some interesting upgrades over there. They'll be back on the show soon, too, to talk about all of that. And it looks like Dees is where the action is. Coming at Showtime, there was about 25,000 overall contracts out there in December. That puts it far and away the number one. Number two is going out this week, October, expiring here on the 25th with almost 19,000 contracts open. The other months kind of fall off a cliff from there. We see March with about 6,300. Nove with about 5,400, then it's pretty much slim pickings from there. So Dees is where the action is. That makes sense from a broad calendar perspective. People can line up their trading around those end of the year type time frames. October, though, surprisingly active. A lot of that coming off the board this week, so it'll be interesting to see how that changes the OI numbers. If we're going to see some rolling out to Nove, doesn't seem like that's the case. Maybe folks are rolling out to Dees, hence the interest in Dees out there. But either way, a lot of paper coming off the board this week, so that'll be interesting to see how that impacts the numbers going forward. Moving on here to the other side of the crypto derivatives fence, a.k.a. the futures. Not a heck of a lot going on that side of the fence today or last week, really. Looking at the CME Bitcoin futures out here right now. If you're curious about backed, got a listener question, I believe, about that in a little bit. But a light volume day and pretty much a light volume week over there in CME land. Let's see. Today we had about a little over 2,000, not even 2,500 when you add up all the contracts out there. OC leading the dance, obviously a little bit north of 2,000. Last week, it was about 3,800 on Friday, 2,700 on Thursday, just a tick under 4,000 on Wednesday. That was a big day of the week. Tuesday, about 2,800. Monday, obviously, we were closed here in the U.S., so no Bitcoin futures lighting it up out there. So a pretty light week, all things considered, out there in the Bitcoin realm. Now let's keep on rolling, talk about a little bit of the products trading beyond Bitcoin. Let's talk about the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, let's do it. All altcoin all the time here. Let's break it down with our top 5 altcoin candidates. You know what they are. You know them. You love them. Maybe you don't. But it's ETH. You got Litecoin, XRP, Bitcoin Cash. Throw in Bitcoin. That's usually your top 5 for most crypto platforms. Some folks, if you're focusing just on altcoin, you could throw EOS in there as well. In fact, let's do just that. Let's look at how the market cap is shaping up. Remember, take these overall market cap numbers with a grain of salt, but I think the percentages are usually somewhere probably in the ballpark. Obviously, Bitcoin number 1 with about a little bit shy of 147 billion. Number 2, we've got ETH yet again, 18.75 billion. That puts it at about 12.7% market cap. Number 3, XRP, 11.7 billion. That puts it at right around a little bit shy of 8% market cap. Number 4, Bitcoin Cash, about 4.25 billion overall, which puts it at 2.8%. From a market cap perspective. Number 5, Litecoin, about 3.5 billion overall, puts it at 2.3% market cap. And let's throw in your favorite there, EOS as well. That's just a tick under 3 billion overall. Let's put it at just a tick over 2% from a market cap perspective. Let's see how some of these coins performed this week. Our old friend ETH taking a little bit of a breather this week, down about 13 handles net from show to show here. Had a decent range, not too far beyond that, about 17 points of a range on the week. So an interesting week out here in ETH, but feeling a little bit of weakness. XRP, interestingly enough, almost exactly unched down to the 100th decimal, really, of pretty much from where we were this time last show. That's pretty interesting. Had a decent range, actually, intra-week, had about a 2-cent range, but it's settling out right now, right around that 29 and some fragments out there, 29-cent range out here. So XRP continuing to kind of remained glued, got down on the downside to about 28 cents, got up to flirted with 30 cents ever so briefly this week. Couldn't maintain it, though. And right back here to literally unched right around showtime. Litecoin down a little bit this week, down about 2.5. It's really fallen off quite a bit since the halving furor kind of died down. Had about a $4 range this week, so kind of a quiet week for Litecoin. Bitcoin Cash had a decent range, actually, a $22 range this week, so it swung a bit, but it ended up net only about 4 handles north of where it was this time last week. So interesting week for altcoin. Not a ton of action out there overall week to week. Let's see really quickly before we wrap up on the action. Let's get a couple of your questions on. A little bit of your crypto questions.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everybody. Crypto questions, you got them. We'll answer them. Also, you got comments, it sounds like, too, and thoughts you want to share with us. like David here. David Colthup kicking it off, saying he's looking forward to CME Bitcoin options. Well, I'm with you. If for no other reason than I've been bugging them for the better part of 2 years to launch the freaking thing. So I'd be a hypocrite if I didn't say I actually wanted to see them trade. I do. I want to see them trade. I want to have a lot of options, pun intended, for all of our listeners out there, whether you want to trade the futures, the options, the spot, we don't care. Just we want you out there active and engaged and have enough products to meet whatever needs, whatever products and whatever different types of digital assets you want to trade. You want to make sure you have enough product choices therein. So yeah, we're with you, David, and everyone else out there who's expressed similar sentiment. We're excited. Hopefully we'll get them sooner rather than later. We don't have to wait till the end of Q1. We'll see them. Let's see, maybe a nice little New Year's present for all of us. What do you think out there? All right, next up, we got a question from Rodriguez. Rodriguez wants to know, what types of volumes are you seeing for the backed futures so far? That's a good question. You know, it's been interesting. Obviously, a lot of people were watching with very great amount of anticipation what's going on out there in the backed land. And so far, it's been a bit of a mixed bag, I think it is fair to say, out here in all things backed. Let's see. Coming into the launch, in fact, doing a little analysis when this question came in, some folks actually broke down the first day volumes for the future when CME launched it, and then when they launched their future. CME did the equivalent of 5,298 Bitcoin that first day. Remember, they have a 5X contract. The back coin is 1-to-1, and of course, much ballyhooed, physically settled. On the first day, back did the equivalent of 71 Bitcoin. So a little bit different there. Maybe the market wasn't as primed as people were hoping. Well, this was obviously a very hyped product, a lot of money, a lot of cash, a lot of big investors behind it, Microsoft, I think Starbucks, a bunch of interesting names aligned there, and yet not doing a ton of paper. We saw some headlines from them where they broke a record a few weeks later there. I think that was on the 9th of October. They set a new daily record. They did 212 contracts that day. That was their biggest day to that point. I believe to date, that is still their biggest day. That brought, at the time, their total OI up to not quite 1,200 contracts, pretty close to it. Actually, they topped out on the 9th at 224, so they did a few more towards the end of the day. But that's pretty much the heights there, the peak. Pretty much every other day has been at or below 50 contracts. Remember, each one of those contracts, 1-to-1, one contract, one Bitcoin. In fact, he pulled it up here going into Showtime here, and Nove had about 40-odd contracts as of Showtime, and Dees had a couple. So a little bit shy of that 50 contract level yet again today. That seems to be where they've settled out. So for the time being, at least, there's a lot of Sturm und Drang around this, a lot of interest, a lot of hype. And so far, at least, it hasn't translated into a lot of volume yet. Obviously, we want more options, pun intended, and futures for our listeners out there. So we hope all these products are successful. At the end of the day, more products for you guys to trade is better for everyone. We don't want to be just one clear-cut winner. There should be a lot of different choices out there for you guys to trade. So we hope all these are successful. Just it seems like in the first blush backed, maybe the volume hasn't quite caught up to the hype. All right, there we go. That music, unfortunately, listeners, means we've come to the end of another epic journey through the world of all things crypto. I want to thank our guest, Grant Colthup from Mine Digital. If you want to learn more, again, Australia, just the hotbed. You have to beat the Aussies away with a stick for this show when it comes to what's going on, hot new things in the world of crypto. Good chance it's coming out of Australia these days. Check them out for yourselves, Mine Digital, if you're intrigued by crypto products and derivatives denominated in some of those local currencies. Give them a follow while you're at it. It's at Mine_Digital over there on the old Twitters. And, of course, I want to thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in those questions, all the fun stuff that you do to keep this show rolling. Keep them coming. We love to hear from you. We have a lot of new listeners all the time, so if you like this show, make sure head on over to your platform of choice, whether it's your iTunes or Google Podcasts, Spotify, wherever you get it. And just leave a nice review to help more new folks continue to discover the show. We're kind of the only game in town when it comes to talking crypto derivatives. So the more the merrier. The more people want to join and listen and have fun and send in questions, the more we appreciate it. We love to hear from you guys. And we'll see you back here next week for more of the Crypto Rundown.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.